Regulations clarify bonus depreciation treatment. The IRS on Friday issued final regulations TD 9874 and new proposed regulations REG-1068008-19 governing the 100% bonus depreciation deduction under Section 168K. The final regulations finalize proposed regulations issued in August 2018 REG-104397-18 with some changes in response to comments. REG-1068008-19 contains new provisions not addressed previously. Both sets of regulations have been posted to irs.gov prior to their official publication in the Federal Register. Section 168K was amended by the law known as the Tax Cuts and Jobs Act (TCJA), Public Law 115-97, to increase the bonus depreciation percentage from 50% to 100% for qualified property and to modify the definition of property that is considered to be qualified. The TCJA allows businesses to immediately deduct 100% of the cost of eligible property in the year it is placed in service through 2022. The amount of allowable bonus depreciation is then phased down over 4 years. 80% will be allowed for property placed in service in 2023, 60% in 2024, 40% in 2025, and 20% in 2026. For certain property with long production periods, the above dates will be pushed out a year. Bonus depreciation is also allowable for specified plants planted or grafted after September 27, 2017 and before January 1, 2027. Final regulations. The final regulations adopt the August 2018 proposed regulations with some modifications. They provide operational rules and address how to compute additional bonus depreciation and how to make elections under Section 168K. They provide clarifying guidance on the requirements that must be met for property to qualify for the deduction under Section 168K, including used property. The final regulations provide rules for qualified film, television, and live theatrical productions. They also clarify how the basis of property that is subject to the alternative depreciation system is determined when it otherwise qualifies for bonus depreciation. Although the IRS declined to remove the term predecessor from the final regulations definition of used property, it did decide to define the term in the final regulations. Therefore, a predecessor is defined as 1. The transferor of an asset to a transferee in a transaction to which Section 381A applies. 2. A transferor of an asset to a transferee in a transaction in which the transferee's basis in the asset is determined, in whole or in part, by reference to the basis of the asset in the hands of the transferor. 3. A partnership that is considered as continuing under Section 708b2. 4. The decedent in the case of an asset acquired by an estate. Or 5. A transferor of an asset to a trust. The final regulations are effective for qualified property placed in service or planted or grafted as applicable during tax years that include the date they are published in the Federal Register. However, taxpayers may elect to apply the final regulations to qualified property placed in service or planted or grafted as applicable after September 27, 2017, during tax years ending on or after September 28, 2017, provided the taxpayer consistently applies all the rules in the final regulations. Proposed regulations. The proposed regulations contain guidance on, first, certain property not eligible for the additional first-year depreciation deduction. Second, a de minimis use rule for determining whether a taxpayer previously used property. Third, components acquired after September 27, 2017 of larger property for which construction began before September 28, 2017. And fourth, other aspects not dealt with in the August 2018 proposed regulations. The proposed regulations also withdraw and repropose rules regarding how the use property acquisition requirements apply to consolidated groups and to a series of related transactions. The proposed regulations will be effective upon their publication as final regulations in the Federal Register. However, taxpayers may choose to rely on them in their entirety for qualified property placed in service or planted or grafted as applicable after September 27, 2017 during tax years ending on or after September 28, 2017.